Hey guys, Angelo Lambropoulos, Director of Lambros Realty, and you're watching the 38th episode of FAQu, Frequently Asked Questions, in which I answer for you as a consumer. Today I'm going to talk about what happens if your loan application falls through. Now, this seems to be a common occurrence in the current marketplace with being a correcting property market. You're probably noticing a lot of properties under offer that are falling through. Naturally, auction clearance rates have dropped, and that's obviously a result of people's skepticism in regards to overpaying at auction and not being able to facilitate the borrowing capacity afterwards. So there's a bit of uncertainty there. So obviously what I'm going to talk to you about is other options you can perhaps exercise. So I guess there's three key options here, and what you want to do if your loan application falls through. Step one, you want to make sure you can prove to your bank that you've got sufficient funds in order to facilitate the borrowing capacity. So your valuation comes in short, no issue, because you've got the cash reserve to come in and facilitate the bridge the gap. Now, if you don't have sufficient funds, what you want to do is perhaps talk to your broker and organize a valuation through another bank. So you'd have to be very quick in making this change, obviously, but talk to your broker and obviously request a valuation through another bank if obviously if it's an issue there. The other option you can obviously exercise as well, use the equity from another property, right? So whether it be an investment property or something along those lines, you can look at using the equity there. You can also discuss or use one of your family members there to obviously use the equity in their property, and obviously they go guarantor. So they're obviously a couple of other options you can use. The other thing as well is it is your right, if the loan application does fall through, you obviously can question the fairness of the loan. You can also get another member of the lender panel to obviously come out and value the home again if you think it's short and it's the banks are being too hard. That is the option there. You can obviously question the fairness of the valuation. So don't just throw the towel in and go, that's it, I can't do anything else. There are other options perhaps and I hope this has sort of given you an idea on that. The other thing as well is I would advise safeguarding yourself, and naturally with the correcting property market and the property market we're now in, I think what you'll find is generally just a general rule of thumb, whatever you're willing to spend, bank on no pun intended, but I was going to say bank on the valuation coming in 5% under. So obviously, if it does come in 5% under, if you can obviously bridge that gap and facilitate the shortfall, there's no surprises there. So obviously, and in saying that as well, look, as long as you do your research, naturally most banks all banks really won't come out and do a valuation until there's a signed contract because the property is not legally yours. So that's where there's a bit of an issue. So to a degree, you do have to take somewhat of a gamble. But being a correcting property market, I would bank on a 5% shortfall to that in which you've purchased on the property. And if you can bridge that gap, you're safe. But again, do your research. There's a few other tips I spoke of before. I hope they help. If you have any further questions on this topic, Angelo Lambropoulos, Director of Lambros Realty, you can email me on info@lambrosrealty.com.au, call me on 0294 810 999, or visit me at our Apple Tree Shops Cherrybrook office here. Again, if any of you guys have any other questions out there, just email me. Any other topics you want covered and you're struggling to find answers for, happy to help. Thanks for watching, and I will be back next week. Thanks, guys.